All right. Today's SPY was up 0.52%, and yesterday we broke above 430, which told us we were likely going to the next resistance higher at 436, and today that is exactly what we did, and we did not close above it. Now above 436, we will have a gap to fill just above 438, so I do think it's possible we push a little bit higher and fill that gap, but eventually we will need to see a higher low pullback, which could take us back down towards SPY 430, and as long as the bulls buy at support and form that higher low and then continue the breakout, I do believe this downtrend is over, and this was just a pullback or a correction before we resume the bull trend, which is exactly why I have this giant green arrow going from SPY 420 towards 460 by the end of the year. So that is going to depend on whether or not during the pullback we hold support, so do keep that in mind. And I think what happened on the triple Qs today definitely invalidated a lot of bearish scenarios because the triple Qs are now starting to rally very strongly, and I'll show you that next when we go over the triple Qs. So on SPY, watch this resistance, and as we start to get a pullback, eventually we will be looking for that higher low to confirm we are going higher. And then of course, there's always the possibility this is a lower high, but I do believe that's less likely today with the price action that we're getting in the triple Qs. But anything is possible, so do not rule out the possibility this is a lower high before we get rejected and start down lower. And that is going to require that break of 430. So if you want to stay bullish, just simply move your risk level to SPY 430. Below 430, we would likely break down and go retest 420 or the next leg lower just below 417. On the NASDAQ 100 triple Qs, we were up 0.55% today, and the triple Qs are looking a lot more bullish, and they've been the leader all year long, so that's really not a surprise. And I told you on SPY, I thought that head and shoulders pattern was just going to be a bear trap, and you see the same exact bear trap on the triple Qs, never quite breaking down below the neckline and getting a very impulsive rally off the low. So again, these patterns are traps if you fall for them, and right now we have no confirmation the triple Qs are head and shoulders until we get that confirmation of the break below 355. We had the exact opposite, and we had this double bottom from 355. We broke the neckline at 362, and now we're at the critical resistance at 370. Now this is a very deep retracement, and you have to be very bearish if you believe that we're going to do one of these numbers and start rallying all the way down to lower prices. So in my opinion, that is going to require a black swan event, and I think that's completely against all odds, which means it's not impossible, but it is very unlikely. So the only way I would humor that we're going to lower prices would be the break below 355. But again, if you didn't buy at 355, you're probably thinking this is too high to buy now, and you'd be absolutely correct. You'd be crazy to buy at 370 because this is exactly where we're likely going to get a pullback, which will need to hold this breakout in the 360s between 360 and 362. So if you're a bull, manage your risk from the retest, which we are inevitably going to get one. And as you can see, the price action is now back above all the moving averages. So as I said before, it's very possible this pullback and correction are ending and we're resuming the bull trend. On the Dow Jones, we were up 0.4% today, and the Dow Jones broke above 336. And from there, we were looking for a test of the negatively sloping 20 daily moving average. And if we break that, we're looking for a test of 341 and the gap fill above 344. Again, all of these indices will eventually need to prove a higher low into a higher high to confirm the downtrends are ending. So if you're really starting to get bullish now, you're going to fall for the trap of FOMO. We are due for a pullback, and that's going to be your next low risk entry. On the Dow, look for support between 336 and 334, and if we can't hold that support, we're likely coming back down to 331. On the Russell 2000 IWM ETF, we were up 1.13% today, and we broke that resistance at 174 and hit the negatively sloping 20 daily moving average, which is that level at 177, and we did get rejected from that level. If we can break through the 20 daily moving average, look for the next resistance just below 179 and the gap fill just below 180. If at any point we get rejected and break down through 174, we could come back down towards 170, and if we break 170, we're going to 164. On the ARKK ETF, we were up 2.11% today, and we did fully close the gap above 40.7, and if we continue any higher, we're looking for resistance at 41.3. I still think the ARKK ETF is in a downtrend that's likely going to fill the gap at 36, but we're only getting bullish if we could break back above all these moving averages and confirm higher lows and higher highs. On the VIX, we were down 3.78% today, and the VIX continues to crush from 20, but we're now sitting above a positively sloping 20 daily moving average within a bull trend. So if the VIX were going to spike out above 20, this could be a valid candidate for where it could do so from. So watch for possible support here on the VIX, which would obviously be bearish. And if the VIX spikes above 20, we're likely out of the bull market and heading into some deeper bear market. On Bitcoin, we're currently trading just above 27,000, which is the critical support. And remember, Bitcoin is stuck between 27,000 and 28,000, and we're getting bullish above 28,000, and we're getting risk off below 27,000 for a retest of 25,000. On Tesla stock, we were up 1.52% today, and we did break the high at 262. So from here, we'll likely test the resistance at 274, and then above that, go fill the gap below 290. Manage your risk at 255, and if we break below 255, we're likely coming back down into the low 240s, and then below that we go to 230, and below that we go to fill the gap below 218. On Apple stock, we were down 0.34% today, and Apple tried to break that critical resistance at 179, and so far it has not done so, and if it does break out, we're looking for the gap fill right around 181.5. Any high volume rejection from here means we're likely going to get a double top that could take us all the way back down to fill the gap at 167, and do keep in mind earnings is now right around the corner. So jumping back over the S&P 500, everything is pretty much playing out exactly as planned, and we're now getting into the very critical resistance zone that I will be looking for a pullback into a higher low to confirm the bull trend and that the correction is over and we're going to higher prices. If you missed this rally from the low risk entry, just learn from it. This was where I told you it was very low risk and very high reward, and you can now see that has played out, and even if it didn't, it was still worth taking because it was very low risk to do so. Try to put yourself in low risk opportunities, which are very rare, but when they come by, you need to pounce on them, and this was another great trade where we saw it coming from a mile away and capitalized on the bounce. So we're at the point where you need to be very careful as we're up near resistance, and any pullback from here will need to be watched very carefully to see if it resolves into a higher low or if we have just put in another lower high. All odds still favor the bulls in my opinion based on the weekly chart, so do keep that in mind. We are absolutely crushing this market on the Stock Channel Discord and Bank Trade Alerts, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.